And good afternoon. Welcome into Market Talk for Thursday, March 11th. And great to have you here with us as always. MarketTalkAg.com, our home on the web. That's where you can find us. I'm your host, Jesse Allen. And again, good afternoon to you. And you can find our great radio affiliates on our website, all the links to our social media. And you can give us a follow there, as well as all of our streaming sources, everywhere you could find the podcast and past episodes. It's all online, MarketTalkAg.com. You can find us, of course, Spotify, Apple Podcasts, iHeartRadio, watch the video on YouTube, and so much more. Well, wheat was down hard today, while quarter beans were solid, and hog futures were pushing some good numbers in hogs here. Let's talk all about it. Let's bring in our good friend John Heinberg with Total Farm Marketing by Stuart Peterson. John, good afternoon to you.
Good afternoon to you. Beautiful day out there. A little bit breezy today here in Wisconsin. Things are blowing around pretty good after that little storm front last night.
Yeah, I noticed some friends back in Iowa mentioning some of that storm front and wind was kind of blowing up that way. Not much wind in Tennessee today, but it is a nice one. I think same as you guys, so that's a good thing. Maybe a sign that spring is close. I know a lot of farmers are thinking about planting here soon, John, or at least in the next few weeks.
Yeah, it's going to become a major focus on the marketplace. And over the next couple of days or next couple of weeks here, obviously we got the acreage numbers coming at the end of the month on terms of the USDA survey for planting intentions. So that'll be a real big focus and how we get started on this springtime planting weather here and what's happening in that regard. You know, watching some of the long range forecasts. Looks like we're going to have some pretty decent weather to really get rolling. Now, obviously, we got dryness concerns out there, but at least in terms of getting the crops in the ground, it's starting to look like we have a pretty favorable spring. Mm-hmm. We'll see how that plays out on the price side of things, but then we got to watch the longer range. Weather is going to be a big story this year, especially in a market that's going to be extremely hypersensitive given the supply-demand picture that we're dealing with.
Well, and you talk about weather, and I think that was one of the big drivers we need to touch on here today on a couple avenues. On the wheat side, we were down hard today. We're talking this big storm system moving out of the Intermountain West and the Rockies, going to bring some of that moisture to the wheat areas, central southern plains, and really help us out with some of the drought conditions there. And that seemed to be really the big factor why wheat was under heavy pressure. And we saw some fun selling there today, John.
Yeah, definitely. You know, we finally have seen some good precipitation, maybe moving across those southern plains in an area that's been heavily pressured by the drought monitor maps and dryness concerns. So a little bit of relief maybe coming in to help get that winter wheat crop rolling to start the year. And with that, you saw the biggest selling pressure in the KC wheat pit today, or KC wheat market overall today. Put that out there too. Plus, we still just have some overall demand concerns regarding U.S. wheat versus the rest of the world. Export sales numbers came out today and within the expectations, but nothing really spectacular in that regard. And that just kind of adds to the selling pressure, especially if we got the prospects of an improved crop.
Yeah, and looking on the wheat side of the equation, we kind of split wheat from quarter beans today. Quarter beans were really solid, and I know that you and I were chatting before we jumped on the air. You were happy with the action, the price action we saw on quarter beans, and really it was nice to rally that back after what was a really rough Wednesday in the trade.
Wednesday, we kind of fell into the same mode that we did after the last two USDA reports. First off, that report came out on Tuesday, didn't change anything in terms of the USDA balance sheet overall. Obviously just kind of a kick the can down the road report. Market was expecting to see some changes, so it didn't like that. And if you go back and you look at the January report, we traded to new contract highs, and then a couple days later, we dropped aggressively and sold off. February report, it was the day of the report. We flipped it over and followed it up with a 43-cent sell-off the second day in the soybean market. And here we are the day after the report yesterday, and we pushed 30 lower. So some of that is just, we have a major event go through. Nothing big came out of that report. Some profit taking ensued, and that was kind of the issue we saw yesterday. On the overnight, we went and tested some support levels on both corn and beans. We held those. We did finish in positive territory, and obviously corn holding in the 3-4 cent gains, especially with the wheat market down double digits in most of the front end months, was still encouraging to see. Tomorrow now we get the March contract off the books for both corn, beans, and wheat, so that's also adding a little bit of choppiness and some selling pressure in here as well as that March contract expires tomorrow.
Well, we look out to the new crop prices, new crop corn, 483.5 today on December, November beans, Uh, Looking at that close, I just had that in front of me. 1243, call it 1244 almost. I mean, these are some really strong price levels, even with that dip that we saw on Wednesday, and we put some of it back on today. Really, really solid and strong price levels on those new crop months. And I think that's a key that farmers really need to pay attention to.
Yeah, we've had a, I mean, if you go look at the charts, we're basically a 45-degree angle from lower left to upper right, showing a good, strong market overall. Nicely supported on the anticipation that demand's going to continue, the supply side is going to be tight. Market maybe putting a little bit of weather premium in here with some of these longer range forecasts that we're already hearing into the summer. So it's getting very well supported at this time frame. And on top of that, the demand picture is still pretty doggone good. I mean, you go look at November beans, or excuse me, 2021-22 bean sales. We're at a 7-year high at this window here for new crop sales for next year. You know, here's China stepping in the market again this week as we put another couple 100,000 tons on the books, as well as some of those traditional buyers that like U.S. beans that look at that and say there's some value. You know, realistically, over the last couple of weeks or last month here in this market, it's been a combination of old crop versus new crop. We've seen the spreads really unwind. In other words, you go look like the May-December corn spread, that's moved significantly here since we basically got through the February report. July-December spreads basically about 50 cents lower than where it was off its highs. So the new crop prices have been holding good gains. They've been holding themselves very, very firm, and we've taken some premium off that front month, especially if the USDA has been keeping that carry out at that 1.5 level. You know, maybe down the road we'll make some adjustments on that, and we're kind of probably counting on that down the road. But at least right now, that's been a seasonal trend that we typically see as those old crop prices soften up and those new crop prices start anticipating the next crop, as well as obviously we're trying to buy each other's acres.
Well, and we talk about the acreage battle, and obviously that's going to be a big thing coming up. But on the weather front, South American weather, that seemed to be another factor that came into the market here yesterday and helped us with that sell off. And then we come back today, and forecast changes again. I mean, Argentina's dry, we know it, and it's we're wondering, I think, at this point, what's going to happen with the weather down in South America and just how much that's going to continue to affect our markets here moving forward. And I think producers are very, very interested in that South American weather picture right now.
Yeah, there's a couple things we need to focus on. Obviously, Argentina is the big buzz in the news, and what really is starting to happen there. You know, we've seen a lot of hot, dry conditions after a very favorable January timeframe in terms of moisture for them. But lately, now obviously, it's gotten hot, it's gotten dry. We're seeing some crop stress. You know, yesterday the Rosario Grain Exchange lowered their soybean estimates down 4 million metric tons. The USDA very subtly took 500,000 tons off their estimates on Tuesday's report. If this rain that's supposed to be forecasted into the weekend, into next week, if that doesn't materialize, there's going to be some significant crop losses there. Again, just looking at items coming across social media, comments from down in that region, it's definitely a very concerning time window here and a very key time window. And realistically, in some cases, even if they do pick up some rain, it may be too late. Now, on the flip side, we got to be keeping an eye on what's going on in Brazil. There's not a lot of talk about this right now, but they have been just pummeled by heavy moisture and heavy rainfalls. That's causing a lot of harvest issues and planting delays in that safrinha corn crop. There's really no clear picture to what extent, but yesterday, it sounded like up in Mato Grosso, one of their key leading producing states, that there may be up to 7 million acres of bean grounds that are going to basically go unharvested, that have been buried under heavy moisture. And then there's a lot of crop quality concerns that are starting to percolate down in that window. Obviously, they're dealing with wet beans, trying to get them harvested. And so we'll have to see how things kind of shake out there. Their forecast is going to stay somewhat on the wetter side, maybe not to the heaviness of the rain that we're seeing now, but still at the level that it's going to make it difficult for getting that crop out. So that might be a developing story going forward. They're still going to produce a lot of beans, and we're starting to see some, numbers maybe adjust there. But let's see what happens in terms of the quality. Let's see what happens in terms of the harvest window and how that relates to what's going on as we move later into the summer, especially with that second crop corn.
Well, we think about that, tidbit of weather news with South America, and if I'm a producer right now, I'm looking at these price levels. We talk about this every week, and I'm assuming the story's not going to change there. If they haven't maybe locked in at least a floor for some new crop, they would probably want to look at doing that, just because, we know this market could swing one way or another. Would you probably say that's kind of still the case right now?
Yeah, really nothing's changed in terms of what we've been talking to producers about. And, again, you stay disciplined on your targets. You got some good numbers in front of you. If you do move some grain in here or you want to stay and be patient, that's, we still got a market that's supportive of that, but make sure you're protecting yourself some form with just some cheap strategies underneath, just in case we get some type of geopolitical event or some black swan event that we need to keep an eye on. Realistically, what's probably going to wind up being the black swan event in 21, if we have it, it's probably going to be African swine fever again. You continue to hear some of the talk of what's going on in China. We don't know how big the situation is, but we do have to notice that their soybean meal prices have tumbled very quickly. That's also weighed over in our soybean meal market at the same time. So, there's still a little concern out there. If all of a sudden we see that demand start dwindling because of just a lack of animals that they're trying to feed, that could have ripple effects through the market in general. At least right now, though, still things are looking very, very favorable. The supply side of the equation is very, very tight. It's been very interesting. Current a couple situations this week where soybean meal crushers and are talking to their producers or guys on the feed side of the equation, basically saying they may not be able to guarantee delivery on product this summer because the beans just aren't there. So somebody that's going to be looking for protein over the summer, make sure you're staying active in that market and trying to get those supplies secured. We had one mill up in the Minnesota area was in contact with one of our customers this week. He basically said, we may not have supplies for you unless you bring us the beans to crush for your own meal. And I've heard more of that as things are moving out, as well as we're seeing strong basis levels for the summer in terms of soybean meal. Again, that's just reflective where the supply situation could be. And now imagine if we start throwing some weather in next year and hurting that crop that we need to put together for next fall.
Yeah, a lot of factors ahead of us here. Let's switch over to livestock. You mentioned African swine fever in China. Why don't we stay on that narrative a little bit before we jump into our hog situation? Because, and I think it obviously all correlates, but I mean, it's hard to tell how much problem it is right now and how much of a problem it is in China right now. It seems like maybe that picture's getting worse by the week, but news is so slow to move out of China. It's hard for us to really know what African swine fever is doing over there. But as you mentioned, it's being reflected in those deli and commodity futures. We've seen that here this week.
Yeah, we have. And again, that's kind of like I said, concerning overall. Could that be a trend that puts a little weight on the soybean market? Regardless, we still got a tight supply picture here in front of us, but you turn that into what's going on in the hog market right now. Obviously, the hog market is really ramped up on strong demand as well as a strong cash market. You got a lean hog index that's now traded about 30 points higher since the start of the year, broke through some topside barriers this last week. Now it's trading at its highest level since 2017. So that tells you what's going on in terms of that cash market. And that's all being reflective in the demand side of the equation as carcasses are well into the upper 90s, even poked at the $100 choice hog carcass this week, And, we're seeing, and the key is, even at those levels, the product is moving. Export sales numbers were solid again this week. Shipments continue to be strong. And now we're starting to add in a little bit tighter slaughter number on a weekly basis. We're down about 5,000 head from last week. And that number is probably going to trend even lower as we move further into the summer. So that's just fuel in this rally in the hog market. As I don't know if we have a breakout today or just another good strong day, but I'm looking at summer hogs within $1 breaking the $100 barrier. That'll be some pretty big resistance just technically and psychologically. Even April hogs, are we going to go across the 90 or the $100 barrier in April? So that market's right now just seeing strong money flow, but the fundamentals are behind it to back it here at this window. And then you throw in what's going to be possibly happening here in the U.S. demand. We had that jobs report last week. That was really key on Friday. It was a very good jobs number, a lot of job creation that basically came out above expectations. And if you look at the breakdown, 80% of the new jobs came from the hospitality, food service sector, as maybe we're starting to see more restaurants, more things of that nature open up as we move through, hopefully the COVID situation. And that's only going to help the domestic demand on top of a hot export market.
Well, and you mentioned those summer month hog futures. I mean, $100 potential with hogs here. I don't know. I mean, between you and I, it seems like a pretty decent bet we might hit that $100 mark on some summer hogs tomorrow, unless there's something crazy that happens. I can't imagine us not getting that mark tomorrow.
I expect that as well, especially if we see carcass values stay firm. And at the end of the day, the demand is just there. And at this time frame, the $100 barrier might be, one of those you get through it and it becomes a new, support floor. We'll see where this wants to go. I mean, obviously now we're kind of getting back into levels we haven't seen for a long time here, basically since African swine fever broke out in 2019. So it's going to be interesting to see how this kind of plays out. A lot of value in the hog market. I am continuing just to work put orders underneath to keep a floor. Obviously, you got to protect that value. I don't want to have anything that's limiting on the top side because we just don't know where we're headed at this time frame. But cattle markets, hog markets, when they get strong moves to the upside, they have a tendency to V out. In other words, they'll give that quickly and form that V pattern, either a V bottom or a V type top. So I'm a little cautious of that. If one of these days the money just says, okay, we're good, and we flip it over. Next thing you know, we're down $4 or $5 in a week, and some of this value disappears.
Let's talk cattle here, John. And this cattle market just continues to struggle, it seems. I mean, futures today, not bad on the live cattle side. Feeder cattle were weaker with the stout corn numbers today, but we just can't break out of this range. It's like 5-6 week range in cash country. I mean, still, 114 levels. It's just been kind of rough here as we've gone through the last couple of weeks, and today seemed like no exception.
We've been talking about it for a couple of weeks now, the large supply numbers of cattle right here in the front end. That still keeps the pressure on the April contract, the cash market, like you were saying, 114, even some 113, catching most of the trade this week, so steady to slightly lower in some regions. So that was a bit of a concern. Also, we've seen carcasses come off their highs a little bit this week, but we're still trading 227, 230 on the choice carcass, which is well above last year's levels, well above 5-year averages. So we still have really good value in the market overall there. Maybe that's being reflected a little bit in the deferred contracts. Actually, we have really good strength in June, October, December today. In fact, October, December did finish with contract highs or a contract high close today. So that's encouraging to see for that third and fourth quarter. Biggest thing that's probably coming across the news for me has been the carcass weights. They've been constantly running heavier compared to last year. Obviously, the Texas storm or the southern storm was a big factor in this, but we've seen carcass weights come down about 20 pounds here in the last 2 weeks, back in line with last year. Now the prospects are tighter cattle as we move forward after we get through this glut of cattle here probably in March and April. That's why we're seeing the strength kind of step into that June contract. Typically a cattle market bull spreads. In other words, they buy the front months versus the back, but because of those heavy supply, we continue to see the premium come out of that April contract versus the cash market, and then the optimism stay in the June.
John, any other final thoughts for us here today as we wrap up the show? Anything else out there you want to mention to producers as we head into Friday?
Again, watch those outside markets. President Biden signed a new COVID package here this afternoon, so that money is now moving. That's obviously got the stock market rolling, probably helping out the livestock sector a little bit more in that regard, and commodities in general. So one thing we want to keep an eye on, though, next week. Next week, the CFTC is allowing position limits to expand for speculative funds. I'm not sure what it's going to do. It could be a major movement in terms of money flow coming into the market. I'm assuming most of these funds have been sitting on long positions, have pretty good gains in them, and now we can see them basically, it's going to be short of, but about a double of what they can hold. So we could come into Sunday night, Monday trade. If they want to go ahead and push that long position, they've got the ability to do that. Right now they're going from about 33,000 corn contracts, which they can hold, up to 57,000 on Monday. So that might be something. If we see a major move in the market and it's not related to the Argentina weather, it's just going to be the money flow coming in to say, hey, we're going to stay with our bias and we're going to push these grain markets or these commodity markets higher. May come through and just be a speed bump and we see nothing out of it, but that's something that's on the radar right now for a lot of us, and just curious how the market's going to handle that movement of position limits. Soybeans going to be almost a double. Wheat's going to be almost a double. Even cattle and hogs, they got an expansion on their limits as well. So if their bias is higher and they want to put some money behind it, we could see that come into play this week in the markets on Monday.
Well, a lot to look at, as you mentioned, and we'll always keep our eyes on that moving forward and talk with great folks like you and the team at Total Farm Marketing for insight. And I know if producers need that insight, they can reach out to you. It's very easy, a phone call or go on the website or send an email, isn't it?
just feel free to give me a call anytime, 800-334-9779. Or again, shoot me an email, johnh@totalfarmmarketing.com. And like Jesse just said, we got our website, totalfarmmarketing.com. We've got webinars, market information, weather information on that site, as well as obviously our contact points are there as well. Feel free to take a look at it. And if you got any questions, there's not time to hold them back. Give us a call. Let's have a conversation.
John, appreciate the time as always. Great to catch up with you. Have a good weekend. We'll talk to you next week.
Thanks, Jesse. Always appreciate the time, and everybody have a great week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Thursday, March 11th edition of the show. I'm your host, Jesse Allen, wishing you a great afternoon.